On a windswept plateau in the Atacama Desert, a convoy of haul trucks lumbers out of a giant open-pit mine at dusk. Each truck carries hundreds of tons of copper ore, freshly blasted from the Chilean earth. The rocks glint green under the fading sunlight, traces of copper oxide hinting at the metal within. This is the start of copper's journey, a journey that will take this ore half a world away to an Asian smelter, then perhaps to a factory where it becomes the wiring in an electric vehicle, or the circuitry in a smartphone. For over 10,000 years, humanity has chased this red-orange metal. Now, as the world races toward a high-tech, low-carbon future, the story of copper, from its ancient past to the geopolitics of today and the uncertainties of tomorrow, is more dramatic and consequential than ever. Copper was one of the first metals our ancestors mastered. Soft but durable, it could be shaped into tools and weapons, ushering in the Bronze Age when alloyed with tin. Ancient Egyptians used copper for water pipes. The Romans mined it on a large scale. The word copper even derives from Cyprus, a major source for Rome. Fast forward to the 19th century, copper's excellent electrical conductivity made it the wiring metal of choice, powering the telegraph, telephone and electric light. By the 20th century, copper had woven itself into the fabric of modern life, from the vast electrical grids that light up cities to the tiny copper traces on circuit boards in the devices we carry. In short, copper became the metal of electrification, indispensable for its ability to carry current with minimal resistance. Today, copper is everywhere around us. According to industry estimates, about 46% of all copper is used in building construction, largely for electrical wiring and plumbing, 21% in electrical equipment, 16% in transportation, from cars to trains to aircraft, and the rest in consumer products and industrial machinery. Every time you charge your phone, drive a car, or switch on a light, copper is at work behind the scenes. A typical gasoline car contains roughly 20–30 kilos of copper in its wiring and electronics, but an electric vehicle, EV, can require up to 80 kilos of copper, about 4 times more. This heavy copper usage in EVs, for battery connections, motor windings, charging cables, etc., is one reason Dr. Copper has been riding the electric vehicle boom. In fact, EV production accounted for about 2/3 of the growth in global copper demand in 2022. Yet copper's importance goes well beyond cars. It's vital for renewable energy systems. Solar panels and wind turbines use significant copper for their wiring and coils, for upgrading aging power grids and for the expanding data centers and telecom networks of the digital economy. No wonder copper is often nicknamed Dr. Copper, the metal with a PhD in economics, because its price is viewed as a barometer of global economic health. The logic is simple. Copper is used so widely across construction, infrastructure, manufacturing and electronics that when the world economy is growing, copper demand and price tends to rise. And when the economy slows, copper prices tend to fall. Traders have long observed that copper's price trends seem to predict booms and busts, hence the moniker Dr. Copper. There's truth to it. One study noted a strong correlation between copper prices and industrial activity, especially in China. In early 2024, for example, copper prices surged to an all-time high of over $500 per pound, about $11,000 per metric ton, on the London Metal Exchange, amid optimism about post-pandemic economic recovery and green investment. Such spikes reflect not just immediate demand, but also worries about future supply. because unlike financial instruments, you can't simply print more copper when demand rises. It has to be mined from the ground or recovered via recycling, which are slow, capital-intensive processes. Copper's journey from raw ore to finished product spans continents and often involves a complex globe-crossing supply chain. It typically begins with exploration, as geologists scour the earth for new copper deposits. Copper tends to occur in certain geological settings, for instance in massive porphyry deposits in the Andes or sediment-hosted deposits in Central Africa. Over the past few decades, however, major new discoveries have become increasingly rare. The trend of declining major copper discoveries has continued into recent years. Only 14 significant deposits were found in the last decade, accounting for a mere 3.5% of all copper discovered since 1990. Mining companies have focused more on expanding known mines than on high-risk greenfield exploration. As a result, the world is leaning heavily on aging mines that are gradually depleting. Once a copper deposit is found and deemed economic, developing a new mine is a massive undertaking. From initial discovery to production start can take well over a decade, on average 15 to 18 years for recent mines, due to lengthy feasibility studies, permitting battles, financing and construction. Many of the largest, richest copper mines operating today were discovered in the 20th century. For example, Chile's Escondida mine, the largest copper mine on Earth, was discovered in the 1980s and began production in 1990. Located in the Chilean Atacama Desert, Escondida alone produces over 1 million tons of copper per year, roughly 5% of global supply. Chile as a whole produced 5.3 million tons of copper in 2024, about 23% of world output, by far the number one producer. South America remains the epicenter of copper mining. Peru is another top source, with big mines like Cerro Verde and Antamina contributing about 11% of global production. Interestingly, the Democratic Republic of Congo, DRC, has shot up to become the second largest copper miner in recent years. 3.3 million tons in 2024, over 11% of world output, thanks to investments in rich deposits like Kamoa-Kakula. Other significant producers include China, the United States, Australia, Zambia and Russia, each providing a few percent of global mine supply. But geology is only part of the story. The copper supply chain is truly global, and often one country's output is another country's input. After extraction, copper ore typically goes through a milling and concentrating process at the mine site. The goal is to separate the copper minerals from the surrounding rock, producing a concentrated powder, often 25 to 30% copper, which is far cheaper to ship than raw ore. This copper concentrate is then sold to smelters for further refining. Here's where the geography gets interesting. About 80% of mined copper ore is exported as concentrate to be smelted elsewhere. In other words, many countries dig copper out of the ground, but send it abroad for processing into metal. Most of the major mining countries, Chile, Peru, Congo, Australia, the US, etc., have relatively limited smelting capacity compared to their mine output. Instead, they ship the bulk of their copper concentrates to countries that specialize in processing. For the past 2 decades, China has been the dominant destination for the world's copper concentrates. In 2023, China imported about 64% of all the world's exported metal ores and concentrates by value across various metals, by far the largest share. This is partly due to China's sheer hunger for copper in its domestic infrastructure and manufacturing, and partly due to a strategic decision. China invested massively in smelting and refining capacity. Since the year 2000, China accounted for 75% of all new copper smelter capacity built globally. Today, China operates more than half of the world's copper smelting and refining facilities and produces nearly 60% of the world's refined copper. One industry analysis bluntly noted that China currently controls nearly all 97% of global smelting and refining capacity added this century, an astonishing dominance. In practical terms, that means if you hold a bar of newly refined copper cathode, odds are better than even that it was smelted in China. This east-west imbalance in copper processing has huge implications. Western nations produce a lot of raw copper, but rely on Asia, particularly China, but also Japan and South Korea, to turn that into the refined metal needed by industry. For example, the majority of copper mined in Peru is shipped overseas to smelters in China, Japan or Korea for refining. Even mines in Africa and South America often have Chinese investment or off-take agreements ensuring the concentrate flows to Chinese smelters. The global copper trade thus ties together mines in the New World with factories in the Old. Ships laden with copper concentrate crisscross the oceans, following a well-worn route from Latin American ports, or African ports like Durban, to the docks of Shanghai, Tianjin and Yokohama. Why did smelting capacity concentrate so heavily in East Asia? There are several reasons. One is environmental and regulatory pressures in the West. Copper smelters are capital-intensive and can generate significant pollution, sulfur dioxide, heavy metals, etc., which led to plant closures in North America and Europe over past decades. Meanwhile, China, with government support, built state-of-the-art smelters at a rapid clip, often in industrial zones where byproduct gases, like sulfuric acid, could be captured and utilized. Chinese smelters became highly competitive, low-cost and technologically advanced, with strong environmental controls, outcompeting older smelters elsewhere. The result? Most Western mining countries now lack the capacity to refine all their own copper. As of 2023, for instance, the United States had only 2 operating copper smelters left, one in Arizona, owned by Freeport-McMoRan, and one in Utah, owned by Rio Tinto. Europe also has few, running below capacity. The centre of gravity for copper refining has firmly shifted east. This heavy concentration of processing in one region raises strategic concerns. Policymakers worry, what if geopolitical tensions or trade disputes disrupt these flows? If China, which also consumes half the world's copper, were to restrict exports of refined copper or copper products, many other economies would be vulnerable. Conversely, China worries about secure access to raw materials, since it depends on foreign mines for feedstock. Indeed, Chinese companies have acquired stakes in mines from the DRC to Peru to ensure supply. Analysts have warned that trying to decouple from China in the copper supply chain would be exceedingly difficult. Wood Mackenzie, a global commodities consultancy, estimated that if the rest of the world tried to replace Chinese copper smelting, it would need to invest around $85 billion in new facilities. And even then, achieving complete independence is unfeasible. In fact, removing China from the world's copper supply chain would create a huge gap that Western economies would struggle to fill. The world is simply too dependent on China's refining capacity in the near term. The East-West split in copper also reflects a broader pattern seen with many critical minerals. The mining stage often happens in resource-rich developing countries or regions, the Americas, Africa, Australia, while the processing stage is dominated by a few industrialized countries, led by China. This has prompted Western governments to rethink their strategies. In the United States and Europe, copper wasn't historically considered a critical mineral. It's not rare, and the US long had secure imports from friendly nations like Chile. But attitudes are changing. In 2023, the European Union's new Critical Raw Materials Act officially designated copper as a strategic raw material, citing its indispensability for the green transition. The EU noted that global copper demand could double by 2050 due to clean energy technologies, and recognized that Europe will need robust supply chains to avoid shortages. Canada, likewise, updated its critical minerals list in 2024 to add copper, explicitly acknowledging copper's foundational role in electrification and the risk of future supply shortfalls. And perhaps most notably, the United States, which had excluded copper from its earlier critical mineral lists, is moving toward including it. US officials have signaled that copper may be added to the National Critical Minerals List to align with allies and reflect surging demand and geopolitical uncertainties. This marks a significant shift. For years, US policymakers saw copper as readily available, but the prospect of simultaneously skyrocketing demand from EVs, grids, etc., and concentration of processing in rival economies has put copper in a new strategic light. The geopolitics of copper are heating up. A vivid example is the United States under the Trump administration, 2025. President Donald Trump has made domestic mineral supply a policy focus, with copper front and center. Early in 2025, Trump signed an executive order identifying copper as essential to national security, critical for defense, infrastructure, and clean energy technologies. This order initiated a Section 232 investigation, a trade provision used to protect industries vital to security, into whether copper imports pose a national security threat by making the US too dependent on foreign suppliers. The context: the US currently imports a large portion of its refined copper needs, and as noted, it only has 2 aging smelters left. The fear was that if those smelters shut down, or if imports were cut off, the US would struggle to obtain the copper it needs for its electrical grid, factories, and military hardware. Following the investigation, the Trump administration took a dramatic step. In mid-2025, it imposed tariffs of 50% on certain imported copper products. The tariffs targeted downstream forms like copper wire and pipe, aiming to encourage more domestic processing and production of these products. At the same time, the administration issued a mandate that an increasing percentage of high-quality scrap copper collected in the US must be sold to domestic buyers rather than exported. This scrap directive is significant. The US exports a lot of scrap metal to places like China. By keeping more recycled copper at home, the policy seeks to bolster domestic supply from recycling. On the environmental front, Trump also reversed a stringent air pollution rule, enacted in 2024, that would have forced the remaining US copper smelters to sharply cut emissions of toxic pollutants like arsenic and lead. The administration argued that these regulations, while well-intentioned, would impose requirements on a limited and already strained domestic industry, and risk causing smelter closures, further undermining US mineral independence and increasing reliance on foreign-controlled processing capacity. In granting US smelters a 2-year exemption from the new rule, the White House explicitly framed it as a move to promote American mineral security by reducing regulatory burdens. Freeport-McMoRan, which operates the Arizona smelter, the only one affected by the rule, praised the decision as recognizing the operational realities facing domestic copper smelting and giving breathing room to keep the facility running. All these actions, tariffs, critical mineral designations, regulatory rollbacks, underscore how copper has become part of the broader resource security narrative. Just as rare earth elements became famous for their supply risks, copper is now joining the club of materials that governments are anxious to secure. In Trump's words, a healthy domestic copper industry is needed to avoid weakening the nation's industrial base and increasing reliance on foreign-controlled processing. The subtext is clear. China's near monopoly in processing is viewed in Washington as a strategic vulnerability. China, for its part, has been leveraging its strength in the copper market. Chinese companies have invested heavily in overseas mining. For example, Zijin Mining is a partner in the DRC's Kamoa-Kakula mine to secure supply. And while China generally exports relatively little refined copper, it uses most internally. It has significant influence on global prices and trade flows. In late 2024 and 2025, anticipation of US tariffs caused some Chinese and global traders to reroute copper shipments, rushing cargoes to the US before tariffs hit. When the US finally implemented the 50% duty on certain copper products, less sweeping than initially feared as it spared raw cathode and concentrate, the market sighed with relief. But the episode showed that copper is no longer a boring old commodity. It's caught up in the currents of US-China trade tensions and industrial policy. Other countries are also manoeuvring. The European Union, beyond its Critical Raw Materials Act, has set targets to boost domestic processing and recycling of strategic metals like copper. Europe still has some copper smelters, in Germany, Poland, Spain, etc., and the world's largest copper recycling company, Aurubis, in Germany. But high energy costs and permitting challenges make it hard to expand. The EU's 2030 goals call for increasing the bloc's capacity to mine and refine a portion of its critical raw material needs, copper included. However, industry groups note that lengthy permitting processes and expensive power, smelting is energy-intensive, presently deter new smelter investments in Europe. In other words, the West wants to onshore more of the copper supply chain, but economic and environmental hurdles are significant. Meanwhile, resource-rich nations like Chile and Peru have their own decisions to make. Copper is their economic lifeblood. Chile's state-owned Codelco is the world's largest copper producer. These countries periodically consider policies like higher royalties or even nationalization to capture more benefits from copper. Chile has debated opening up more areas to exploration versus protecting water and indigenous lands from mining impacts. Any tightness or policy shift in these top mining countries directly affects global supply. All of these geopolitical maneuvers are happening against a backdrop of fundamental supply and demand challenges in the copper industry. On the demand side, as noted, the global push for decarbonization is hugely copper-intensive. Electric vehicles, renewable energy, and grid expansion alone are set to drive a major uptick in copper requirements. The International Energy Agency, IEA, and other forecasters have projected that by 2040 or 2050, copper demand will be astronomical compared to today. One estimate suggests that by 2050, global copper demand could reach around 50 to 56 million tonnes per year, nearly double the current on 25 Merton. Even nearer term, demand is expected to outstrip supply. The International Copper Study Group, ICSG, recently reversed its earlier forecast of surpluses and now predicts a structural deficit of about 150,000 tonnes as soon as 2026. In other words, the copper market could tip into shortfall within a couple of years, not just far in the future. Why the sudden shift? Partly because supply growth is stalling. Despite high prices, mining output isn't increasing fast enough. Refined copper production growth is projected to slow to only 0.9% in 2026, even as demand from electrification, infrastructure and emerging tech keeps climbing. The industry is struggling with what could be called a running to stand still problem. Many existing giant mines are seeing their ore quality decline. Global average copper ore grades have fallen significantly over time, from around 1 to 2% a century ago to well below 0.7% today on average. This means miners must move and process more than twice as much rock to produce the same amount of copper as in the past. For example, at Escondida in Chile, despite a $10 billion investment by BHP to upgrade and expand operations, the mine is essentially working just to maintain output, not greatly increase it. It's a similar story at many mature mines. They're digging deeper pits or underground shafts, chasing thinner copper veins. Opening new mines is getting harder too. The low-hanging fruit of rich near-surface deposits has largely been picked. Recent big discoveries, like the Kakula deposit in the DRC or the Reko Diq deposit in Pakistan, are comparatively few, and some face daunting logistical or political obstacles. On top of that, community and environmental opposition to mining projects has grown. From the high Andes to the deserts of Arizona, mining companies face concerns over water usage, pollution and indigenous rights, leading to permitting delays or blockages. An S&P Global analysis in 2023 warned that many of the world's undeveloped copper discoveries are not progressing toward production quickly enough. They found that out of 239 significant copper discoveries since 1990, 148 were still not in production, and only 15 had reached the construction stage. The rest are tied up in early studies or awaiting approvals. And remember that even when a new mine gets greenlit, it now takes on average 17+ years to go from discovery to production for recent projects. All this points to a potential supply crunch. S&P forecasts indicate that without a wave of new investments, global mine supply will likely peak around 2029 and then start declining, leading to a concentrate ore shortfall of around 2.2 million tons by 2032. A deficit that size would be huge, roughly equivalent to losing nearly the entire annual output of Peru. Already there are signs of tightness. Treatment and refining charges, the fees smelters charge miners to process concentrate, have been at historic lows recently, which paradoxically is a symptom of smelters competing for scarce concentrate. In 2023-2024, some smelters outside China even had to cut back operations due to lack of feedstock, while Chinese smelters kept running by drawing down stockpiles and utilizing more scrap. Speaking of scrap, recycled copper, it's an increasingly important piece of the puzzle. Copper is infinitely recyclable. It can be reused again and again without loss of properties. In fact, about 1/3 of global copper use each year now comes from recycled sources rather than newly mined ore. In the last decade, roughly 32% of the copper supplied worldwide was from recycling, whether from old electrical wires, demolished buildings, or scrapped electronics. This secondary copper is crucial for meeting demand and has a much smaller environmental footprint than mining. However, recycling alone can't solve the gap. A lot of copper is tied up in long-lived uses. The wiring in buildings or wind turbines stays there for decades before it becomes scrap. So, as the overall stock of copper in use grows, there's a limit to to how much can be immediately reclaimed. We will still need substantial new primary copper to satisfy growth, even as recycling is maximised. Another facet to consider is potential technological shifts that might alter copper demand. For instance, to mitigate high copper costs or shortages, some industries look at substituting aluminum in certain applications. Aluminum is cheaper and lighter, though less conductive. High-voltage power lines often already use aluminum cores. In automobiles, Tesla recently announced plans to shift from traditional 12-volt electrical architecture to 48-volt in future EV models, a change that could significantly reduce the amount of copper wiring needed, potentially cutting copper use in wiring to 1/4 of previous levels. Battery makers are exploring thinner copper foils or even alternative materials for electrodes. A Reuters report in 2023 highlighted that while EVs will remain a huge copper consumer, innovation is managing to slightly dial back the copper per vehicle. Forecasts for average copper per EV have been revised down from 65 kilos to 55 kilodars as companies find efficiencies. So there is a bit of a counter-trend. Engineers are aware of copper's cost and weight and are innovating to use it more sparingly where they can. Even so, the net effect is still a steep rise in total copper needed, because the number of EVs, renewable installations and new grid connections is expected to soar. Any per-unit savings are overwhelmed by the scale of deployment. As one analyst quipped, there is no energy transition without critical minerals, and copper is arguably the most critical of all for electrification. A typical wind farm or solar farm requires many tons of copper cabling and components. Electric heat pumps, replacing gas boilers, use copper in their compressors and heat exchangers. Data centers and 5G networks, which underpin our digital lives and future AI infrastructure, rely on miles of copper wiring and high-grade copper in circuit boards and chips. So, where does this leave us? The copper supply chain is at a crossroads. On one hand, copper is enjoying a resurgence of demand and strategic importance. It's often dubbed the new oil in discussions about the green economy, as societies pivot from fossil fuels to electrons. This has positive aspects. It means strong markets for copper producers and potential economic development opportunities for countries with copper resources. On the other hand, it raises serious questions about how to ensure enough copper is available and available in a responsible way to enable that transition. Industry experts frequently cite the need for massive investment in new copper mines and processing facilities in the coming decade. Higher copper prices can help incentivize this, and indeed, the price spike in 2021-2022, when copper hit records, did spur some new project considerations and a flurry of merger activity among mining companies. But mining capital expenditure had been in a lull for much of the 2010s, and it takes time to turn the ship around. The supply response may not be quick enough to avoid periods of shortage. The ICSG's projected deficit by 2026 is small in scale. 150,000 tonnes is only about 0.6% of the market, but it may be a harbinger of wider gaps to come. For the late 2020s and 2030s, multiple analyses, IEA, S&P Global, Wood Mackenzie, warn of a significant copper shortfall unless new sources are developed. One encouraging sign is that some new mines are finally coming online. The DRC's Kamoa-Kakula is ramping up phase by phase. It aims to be one of the world's biggest copper mines. A major mine called Quellaveco opened in Peru in 2022. And huge projects in Chile, like Tex Quebrada Blanca 2, are adding capacity. Global mined copper output did rise in 2023-2024 after the flat period, and Chile's production is expected to hit a record 6 million tonnes in 2025 as new mines and expansions boost output. So, the situation isn't hopeless, but sustaining growth will require a pipeline of projects and overcoming the aforementioned hurdles. Another pillar will be recycling and efficiency. Policymakers are pushing circular economy approaches, improving collection of end-of-life electronics, encouraging recycling of old wires and plumbing, and even urban mining, recovering copper from demolition debris. The EU, for instance, sees increasing copper recycling rates as key. European smelters are investing in advanced recycling technologies to recover copper from complex scrap, like e-waste. If the global recycling rate, currently about 1/3, can be pushed higher, that could significantly alleviate the need for new mine supply. However, recycling has its limits, since you can only recycle what becomes waste. As long as the total stock in use is growing, primary mining remains necessary. From a geopolitical standpoint, we're likely to see more efforts to diversify the copper supply chain away from over-concentration. This might include investments by Western alliances in mining projects in Africa or Latin America, to secure offtake agreements that bypass Chinese middlemen, as well as attempts to establish new smelters in places like the US or Canada, possibly with government incentives. For example, the G7 nations have discussed coordinating on critical minerals. Canada recently announced support for 25 critical mineral projects among G7 countries, which presumably includes some copper initiatives. Japan and Korea, already big smelting hubs, may also expand capacity to offer non-Chinese processing options. That said, completely rebalancing the copper supply chain is a long game. The world will continue to rely on China's smelting prowess for the foreseeable future, simply because it's not realistic to replicate that capacity quickly elsewhere. As Wood Mackenzie put it, decoupling from China completely will mean a more expensive and much slower energy transition, unless an unprecedented effort is made to build new plants globally. So a more pragmatic approach is expected. Cooperation where possible, maintaining trade flows. After all, it's in China's interest to keep importing concentrates and exporting finished goods, but with contingency plans and moderate onshoring for resilience. In conclusion, copper's story is evolving in real time. From the miner chipping at an outcrop in the Atacama, to the trader watching copper prices flash on the London Metal Exchange, to the policy strategist in Washington or Brussels fretting about supply chains, all are participants in this unfolding drama. Copper has always been cyclical, rising and falling with economic tides, but now it also carries the weight of strategic importance. The past has shown copper to be a reliable workhorse of civilization. The present finds it as a linchpin of both industry and geopolitics. The future will test whether we can mine, recycle, and innovate enough of this old metal to meet the new world's demands. One thing is certain. If humanity succeeds in building a sustainable, electrified future, it will ride there on copper cables. And if there's a bump on that road, a shortage, a trade war, a supply shock, Dr. Copper will be among the first to sound the alarm, as it has for decades. The horizon looks bright. Literally, electrification means lights, trains, data humming across continents, and that glow is flowing through copper veins.